Hello and welcome to the Decrypting Crypto podcast. It is August 7th, 2025. And as always, we're here with your weekly recap of the biggest stories in the crypto space. I'm Matthew House-Barbie and I'm here with Austin Knight. How you doing, Austin?
Doing well, Matt. Did you see that Visa just settled its first cross-border payment on Solana? Like
I
no
did
banks
not. I
involved?
did not see that. That is very
Yeah.
interesting.
Yeah, it feels like the TradFi dam is starting to crack a little bit here. So I know that we've got a lot to talk about today related to that. Should we
Yeah.
dig into it?
Yeah, for sure. Because I think the big discussion area that we touched on time and time again through a lot of last year in particular, and really since we've been in this high rate environment, has been the shift of real world assets coming on chain. And where most of this has happened so far has been in tokenized bonds, so US treasuries in particular coming on chain, private credit, and also we've seen a fair amount of money market funds. And I remember we were talking a lot about money market funds not too long ago. Right now, I'm just looking at rwa.com, which is a pretty awesome place to go and just see how things are tracking when it comes to real world assets. Let's give this a little refresh just so that I can show the charts properly. But you can kind of see there's near enough $25 billion worth of real world assets on chain. And this is made up of, okay, you've got like a pretty chunky piece is stable coins, but they're excluded from that total. So you can see, the market cap of stable coins is 260 billion. But when we start looking at US treasuries alone, 6.67 billion in US treasuries. I don't think people quite realize how much is there in terms of treasuries. Securitize are one of the big protocols here, Ondo as well being another one. And one name that you'll consistently see is Franklin Templeton more and more as they bring more on chain. Global bonds, slightly less in value, but I mean, that is also generally the bond market. But still 305 million. Private credit, this was booming. I mean, look at this chart that we can look at here. This is the growth that you're seeing in private credit that has come on chain. And it's gone from 2022. Let's actually go even 2023. There's like 4 billion in assets on chain, and you just see this enormous rise. Like where we are today to 15 billion. It's a huge amount. It's across all different kind of chains. You've got commodities like tokenized gold, etc. But what I thought would be awesome to talk about is none of these. It's tokenized stocks. And stonks have entered the blockchain in a really big way. I've personally been pretty involved in this with the stuff we've been doing at Kraken, but it's been at pretty much all of the exchanges. Robinhood, I know Coinbase, looking at this.
Yeah.
This feels like a moment similar to when we were talking a little bit about stable coins becoming a thing in 2019.
hmm
This feels like that moment for tokenized stocks.
It's it's a stablecoin moment for equities, right? Just like stablecoins basically took dollars and turned them into programmable money, tokenized stocks are going to take equities and turn them into programmable assets. And so this is like it's a disruption of legacy finance. Not just replacing fiat currency, but Wall Street rails themselves. So this feels like a big one, but I don't know. Like, is there, do people understand exactly what tokenized stocks are and how they work?
I don't think so. Last year, I'm like a member of this online community that's focused largely on all different kinds of investments, and they asked me to come on and talk a little bit about crypto because crypto is like one of the things that was talking about. And I got questions a lot about tokenized stuff in general. And the main question is that the main question that I would get a lot on this front is just like, why the hell do I want a tokenized version of Nvidia
Uh-huh.
stock? Or like, what's the benefit here? And I think what the I think we can come into like how this all works, but this is going to be one of those situations similar to stable coins where it's like, why the hell do I want just a crypto version of my dollar? Like, what's the value
Mhm.
in that? Like, and now it's just so obvious. You're completely disintermediating um centralized issuers. You have complete custodial access to, in the terms of stablecoins, to the assets themselves. You can earn superior yield. You have way less fees. All of this, and what it does is it opens up whole new markets on chain.
Mhm.
Being able to take on like collateralized leverage on chain that just for so many people is not actually even possible with their fiat via traditional banks and otherwise without, and even if they do, getting extortionate fees on top of that. Tokenized equities is a very similar story. Um, I don't think many people realize outside of major US, Canada, and European markets how difficult it can actually be to just even gain access to top like US equities. I mean, you'll know this
Mhm.
from your experience in Brazil, and even if you can, paying extortionate fees on top of that. And what tokenized equities actually are, if we just get back to this, very similar to um, stable coins in that by and large, these assets are tokenized representations of actual, real shares in the companies,
Mhm.
largely public companies. So let's use Nvidia stock as the great example. You'll have tokenized Nvidia stock, and that will be backed one to one with actual, Nvidia stock. So usually there's an issuer, one of the biggest ones, the one that we've been working with at Kraken is Backed Finance, which issues X stocks. So Backed will manage and custody along with like also the centralized exchanges that are offering this. Like Kraken, we will hold in custody one to one Nvidia stock in custody for all of the tokenized versions that are being issued. Now, um, in a very similar way to which, stable coins, whether that's through actual USD or treasuries. And what this you'll see lots of different flavors of this. There are also like synthetic perps, which aren't actually backed one to one, which we'll just like park those for now. But the beauty of this is that we can then start trading these on chain. Um, Being able to collateralize your tokenized equities and borrow against them for stable coins, you can have way more lending opportunities to earn yield from your tokenized equities. No doubt there's going to be an explosion of really interesting protocols that come off the back of this, that we will start to see all kinds of new markets opening up that we just can't really conceptualize right now until we start to see this all play out. But I mean, if we look at, let me get this June dashboard up, where for X stocks alone, right, you're talking on-chain transaction volume from the past month, $410 million worth, huge amount. And similar to actually how most just regular equity trading happens, you'll kind of see like the supply here is heavily weighted towards the majors. Supply, by the way, being that, you know, whenever it's like a mint and burn type situation, same as with stable coins, where if somebody wants to tokenize Tesla stock, they can mint that, and the supply will grow as demand does. See, Tesla is one of the biggest. Nvidia, Circle, Strategy, Robinhood, all the regular usual suspects are there, and they are tracked and not hard pegged, but largely arbitraged and backed by the underlying equity. So the price should be in and around the same. So it's super interesting. I think we're going to see loads more here. One of the other benefits that comes with this is, just out the gate, 24/7 trading.
Yeah, amazing.
That's going to be awesome. And so you'll have 24/7 trading. It's all going to be issued on a blockchain. So if you think about today, I would imagine most of our listeners either currently hold equities or have at some point in their life held equities through their brokerage account. Have you ever tried to transfer? Like, have you ever done this, Austin? Have you ever tried to transfer equities from
It's
one brokerage account to
excruciating.
another? Horrendous.
I mean, by design, I guess.
Yes,
But-
yes, it is. It's really painful across most brokerages, and I've had to do this a few times in the past. Can take several days, sometimes over a week, to transfer across. You often have to pay fees. You have no visibility on this happening. In this case, this is just like buying Bitcoin. Buy tokenized NVIDIA. You can keep it in your exchange account or wherever you purchased it, or you can just take that out into your non-custodial wallet, trade it on chain, move it without fees. You can fractionalize it. So usually with like traditional stocks, you're going to have, the smallest denomination of an NVIDIA stock is like one share. Well, with tokenized stocks, be fractionalized, be 0.1 of an NVIDIA stock. And this is like super interesting. Also, we can have stablecoin settlement as opposed to always having to settle in fiat. So there's
is there any kind of opportunity at like capital gains tax avoidance here? I know that you mentioned no fees, but if you were to keep it in stable coins, is there a way around that?
Well, for us, me in the UK, you in the US, no real difference. Be treated
Okay.
similarly from a capital gains perspective, mainly because equities and crypto are treated pretty similar from a capital gains perspective in each of our jurisdictions. In other countries where crypto and taxation on crypto is treated differently to taxation on equities, which in fact, I actually think Brazil is one of those situations. I could be slightly wrong on this. I think Portugal also. There's many different situations where actually this will be a crypto asset and not an equity, because more often than not, when it comes to while these assets are backed one to one with things like a stable coin, you can also redeem your stable coin for the underlying, dollar value. So you could swap that for your $1 or however much it is from the issuer, like Circle, for example, at any point. With most tokenized equities, you often can't actually redeem it for the underlying equity, rather the dollar value of the underlying equity. This is like a very minor thing that doesn't really have any material like ramifications for most people, but it's also just like some slight nuance here as well. So, and there's a whole giant piece around like dividends and stuff that's being figured out, and it's worth calling out like the legislation around all of this is evolving as we speak. But Solana has popped up as probably being one of the most actively traded on chain, like blockchains for tokenized stocks, largely through X stocks, and then securitized, which are, I can't remember if they have their own blockchain or if they are on Ethereum. But I mean, it's a matter of time before all chains support these, because it seems like every week a new um, company, a new exchange, a new brokerage is starting to offer these. So
Yeah, I mean, it's amazing. I think that the value prop alone of being able to just handle all of your crypto and your equities in one place, which of course, several companies have tried to figure out, Robinhood, Cash App, et cetera, as the sort of centralized exchanges and brokerages all in one place. They all, do it to varying degrees, but this idea of being able to, hey, I'm just gonna manage everything through Kraken, and then I'm gonna store my equities in the same way that I store my crypto. I own the keys to it. I can move it around easily. If I'm not in the US and I'm in some type of jurisdiction that makes this very difficult, like this makes it a lot easier. I can trade 24/7. I can buy into equities that I previously wouldn't have had access to, even if I were in the US, like pre-IPO or fractional stocks. I like these things are huge. You're actually not only are you gaining access to something that, especially for a crypto native, is going to be a lot easier to use and a lot friendlier to transfer and move around, but you're actually gaining access to investments that you otherwise wouldn't have had access to because you're not an accredited institutional investor or angel investor or something like that.
Well, this is
I really think
one, the pre-IPO stuff, because this is kind of come off the back of all of this. Most of the volume right now is on public stocks, but now we're starting to see tons. I think Jupiter, the major DEX aggregator on Solana, has just announced they'll soon be launching pre-IPO private stocks, and they're doing this. I'm not very familiar with this platform, but it's called pre-stocks, and yeah, I mean, if I look through the list, it's like, a who's who of all of the top private stocks. You want to buy OpenAI kind of equity, you can tokenized equity. You can do it, and there's a whole host of different things that are happening there, where there's even like private equity firms like SPVs being spun up, where you can tokenize captive positions. It's going to get really interesting. It's also going to probably get a little bit wacky at times.
I'm sure it will. Yeah. But I mean, the pre-IPO tokenization alone, that is a major headline for the crypto space, in my opinion, because access to private equity has always been gated, and this opens that up to a lot broader participation without needing a VC seed or an 8-figure checkbook or something like that. And I think that what we're seeing here is that simultaneously a new investor class is forming. You have these younger crypto native investors that they don't want a Schwab account.
No.
They don't want a Morgan Stanley account. I wish I could close all of that shit.
I was about to say, does anyone really want a Schwab account?
Yeah, maybe it's not just the younger crypto native people, but this is like an everyone and everything problem. But
it's I think of all of the initial, we saw 10, 15, maybe 20 years ago, the rise of neobanks. And this is the next evolution, I think, where crypto is taken that forward.
Yeah. I think that crypto native investors, they want to buy Tesla or Nvidia in the same way that they ape into a freaking Solana token in a permissionless, fast, interoperable way. And tokenized stocks are bridging TradFi, traditional finance assets, into that mindset. So I think that is huge. There is a caveat to this, though, right? Which is that not all tokens are created equal. Some of I think you hinted to this earlier, Matt, but some of these are one-to-one backed with the equity. Others are synthetic trackers. And that's a key distinction, because custodied tokens are real exposure to the actual stock. Synthetic ones are basically just bets. And that distinction isn't very clear right now. I think that we need some clearer labeling in this space so that people know what they're actually getting themselves into. And I was also wondering, the pre-IPO tokenization, is that going to have to be synthetic? Like, how can you, if you can't buy an equity there?
Most of them, I think, that I've seen so far, I don't know what pre-stocks are doing, are synthetic that I've seen
Yeah.
happen right now, which isn't really that hard. All you really need for like a synthetic token to trade is a price index, and then it's ultimately like a perpetual futures contract, or maybe not a perp, but like a futures contract that you're trading on it. However, I think what is being discussed a lot more is that there is a desire to have truly backed one-to-one, like private equity,
Mm-hmm.
tokenized private equity, which, yeah, I'm not 100% sure how that would work. There would probably have to be some form of like secondary issuance. I mean, it could be a
Mm-hmm.
super interesting way for companies to fundraise. Issue a ton of secondary shares pre-IPO, tokenize them, and raise funds as a
Yeah.
result. I mean,
Yeah.
loads of TBD asterisks on how feasible all of that will be, but we'll see a lot of different models coming up around this for sure. So yeah, I think it's going to be
It's a
super
really
interesting.
interesting time there.
Yeah,
Yeah.
lots of developments, I'm sure, on the regulatory front from that perspective. But I really think that this is gonna blow up. We'll have the likes of
Mm-hmm.
Aave and Co offering big lending markets. We'll see super interesting ways that people are going to build whole ecosystems and markets around these. I'm personally
Yeah.
excited. I've been playing around. I hold some tokenized equities mainly just to like play around a little bit. So it's cool.
Yeah, it's awesome. Speaking of the regulatory front, lots been happening there, right?
Oh man, this is a huge win. So the SEC has, at long last, come out and said that liquid staking tokens are not securities. I'm going to put like an asterisk around that because there is some caveats. This was earlier this week. They issued a statement, clarified that LST, so liquid staking tokens like Lido's staked ETH or Rockable's RETH, the many staked ETH tokens. Because they represent a claim on the staked ETH, they don't meet the definition of a security. So what does that mean? So I think when you think about a staking in general, you're locking up an asset to receive a yield on that asset. So you're physically receiving it. So
Mm-hmm.
there are arguments that are made previously with the SEC where this is kind of like that in itself could be deemed as a security because of the fact that it's almost like a dividend payment, et cetera, et cetera. However, what you have with liquid staking tokens is they're kind of like a wrapper around this. So instead of you locking up ETH and receiving staking rewards, you swap ETH for staked ETH. And ultimately, like the rewards accrue into that's the value of that staked ETH over time as a wrapper, which is also a much more tax efficient way of earning yield as well across most jurisdictions and countries. And then ultimately, you're seeing an increase in the value of that, or an incremental increase in the value of the actual staked ETH token versus actually just receiving a separate reward. So under this, they're saying that they are not securities. This has been a huge kind of albatross over the head of many protocols that have been building in DeFi, and the SEC has basically, they they've made a load of distinctions. They've said, in particular, the setup here matters. So there's, I think, 3 or 4 really key pieces. The protocol's got to be sufficiently decentralized, so it can't be controlled by a one or a small number of individuals. So Lido, Rocket Pool, etc. All good. Staking mechanism is non-custodial and transparent, which happens with liquid staking tokens. And if that is the case, they do not consider LSTs to be securities. Obviously, we saw tons of crackdowns on centralized staking services. Kraken, of course, went through this ourselves, along with many others. And I think the key here is, why is this important? This finally provides clarity for all of the DeFi protocols that are building in this space, and just removes a major legal kind of overhang for
this is basically this regulatory clarity is a green light for DeFi builders, right? It gives them the most regulatory legitimacy that we've seen so far for the core primitives of Ethereum. I think that liquid staking is now arguably one of the only DeFi use cases with actual legal clarity in the US.
Yeah. That and maybe now stable coins.
Yeah.
So
it's this is also it's a strategic unlock for Ethereum, right? I mean, this is going to remove the chilling effect that's been hanging over staked ETH for years, and big institutional players may now feel a little bit safer about engaging with these assets. So I think that we could expect some increased demand for liquid staking tokens as yield-bearing instruments, actually. But that decentralization part is like really interesting for services like Coinbase and Kraken, right? It seems like this was a big win for decentralization and a bit of a loss for custodians. Like centralized services like Coinbase had to shut down or restructure staking because they are custodial, whereas like Lido and Rocket Pool, they're permissionless, they're non-custodial, and the regulations seem to kind of lean in their favor.
Well,
which I guess is
kinda. I think, I think we already had some clarity on the staking side of things. Well, at least we, all of the lawsuits that were filed around this have been fully removed, and I think on like the centralized exchanges, it's been relatively good from a US perspective on staking. Staking still remains very contentious across other geographies, in particular places like the UK. But like, even for the likes of Kraken, Coinbase, Robinhood, etc., you don't see a lot of liquid staking tokens even listed on exchanges because of this reason, right? And that, I think, has been something that's kind of held back on there. But I think overall, this is a big net positive for everyone involved, and it's just another step forward. I mean, this year in general has been a very good year for giving clarity to DeFi, which is where innovation is gonna happen.
Yeah. Do you think this helps to sort of carve a path to where we could see liquid staking tokens listed on centralized platforms like Coinbase and Kraken? And
100%. And I think, to be honest, most exchanges since the start of this year saw a lot of this coming and started to just say, we're moving forward. We're aligned in general, so that's already happening. I think what we're still waiting to see is, will this apply to some of the new innovations in liquid staking, with like restaking, with things like eigenlayer and stuff. I that wasn't mentioned specifically in this, but you would assume it would apply. But there's also still not explicitly called out, but I don't think that's a big deal at this stage in time. You want to talk about Deepin? Let's do it.
Yeah, so Coinbase, speaking of Coinbase, launched something called the DePIN Index. What is the DePIN Index? Well, DePIN stands for Decentralized Physical Infrastructure Networks. Try to remember that one. But basically, these are crypto projects that use blockchains and tokens to build and run a real-world infrastructure like wireless networks or cloud computing or storage or even video delivery. And the DPIN index is a new product from Coinbase that lets investors track and trade a curated group of these tokens all at once, basically. So it's an index, kind of like a crypto version of a sector ETF. And so this includes a bunch of different projects like Helium, which crowdsources wireless hotspots to create decentralized internet coverage.
It's pretty cool.
Render, yeah, it's an interesting project. Render lets users rent out unused GPU power for rendering like 3D graphics and for AI workloads and things like that. Akash sells cloud server space from unused computers around the world. And then another project that's involved is Theta, and they offer decentralized video streaming infrastructure, like a sort of crypto powered CDN. And I know that all sounds like very kind of opaque and technical, but it does matter. Coinbase is essentially making a strategic bet here that real world infrastructure will be the one of the next big narratives in crypto. And if you think back to the past, like we were talking about DeFi today, we talked about NFTs, pudgy penguins a couple episodes ago.
Oh wait, I just noticed the pudgy in the background.
Yeah.
How did it take you that long to notice this?
Yeah, my pudgy Viking. I decided it was time to make a real investment in the crypto space. And I will tell you, Matt,
we've been waiting for is finally
here. Yeah. I actually bought a pudgy cowboy, and for some reason the Vikings showed up. So I don't really know what is going on at Pudgy HQ here, where they're getting these cowboys confused with these cow penguins. But anyway, yeah, I'm officially an owner of a lifetime friend, as they call it,
generational, the pudgy penguins, I think.
Yeah. But anyway, so in the past, there's these big crypto themes like DeFi, NFTs, AI tokens, and the thought is that another big theme here could be about tokenizing real infrastructure, and this would basically be infrastructure as an investment. So the index lets you bet on the unbundling of companies like AWS for cloud services, or Verizon for wireless services, or YouTube for video streaming, but powered by communities and tokens, not corporations. It's that's a bit of a bold bet, but nevertheless,
well,
Coinbase.
I think I do think there's also an angle here, which I think is very unique from an offering perspective and caters to some very specific needs that can't be addressed by many of the players that you just mentioned there. Whenever we think about like a lot of, whether it's DeepIn or some of the adjacent areas, if we look at something like let's use Render, for example. I don't necessarily want to talk about specific projects, but where we are ultimately offering GPU power, right? For using 3D graphics or probably AI, like work streams, right? So if you want to do that right now via like some kind of cloud offering, it's pretty easy to do that. Like whether it's like AWS or otherwise, you can go and quickly spin that up. Now, all of this is going to be via a centralized server, and there is nothing that you can do about that, nor really AWS. The difference with a lot of these crypto projects, in the same way as like how Helium works for to be a competitor to Verizon, is everything is decentralized. You're not getting this GPU power from a giant server space in Arizona or whatever. This is distributed from machines all around the world. And what that enables you is to avoid honeypots, increase privacy, and also the individuals that are providing this GPU power, or in the case of Helium, renting out some of their 5G connection, for example, or their Wi-Fi, however they're doing it. It's a way of then also them actually like monetizing this and passing on. So I think there's like on the AI side in particular, where processing power is just in incessant demand, privacy becoming more and more of a really big part of all this. I'm not sure if you saw ChatGPT's recent blunder where Google was like indexing every
Hmm.
single one of the the shared discussions of ChatGPT. That's slightly separate, but it's going to become more and more of a concern. So I do think, aforementioned projects to one side, Deepin has an actual like USP that can't be offered by the traditional players.
Yeah, yeah, it's interesting. And Coinbase, what they're effectively doing here is they're offering one on ramp to this trend for investors. So if those projects are enticing to you, you've basically got this single place that you can go to invest in an index backed by or tracking rather those projects. And that matters because these tokens are a little bit harder to understand or discover individually. Most people can't evaluate 10 small different protocols, but they can say, Coinbase has this Deepin index. I'll just go ahead and buy into that. And it really, if you're thinking at the institutional level, institutions do want broad exposure without having to pick individual winners. So I feel like, just like people once bought into AI ETFs to sort of ride the AI trend without knowing like every single little chip company or every single like GPT startup. This index is how they'll ride the next wave of crypto utility.
I feel like today has been like we independently for anyone listening, it's like we kind of independently each week just surface stories and think about some talking point stuff that we want to bring and just discuss together. And independently, I think we've come to everything centering around tokenization in some way, shape, or form,
Mm-hmm.
actually, which I think hammers home some of the first points that we were making around all of this. Coming back to like tokenized stocks and talking about things like the Deepin Index, what we're already starting to see is also like tokenized ETFs, which very
Mm-hmm.
similar to this will have, and these are like more crypto bundles, which you'll see across all exchanges, across all DeFi in like the next few months for sure. This will be a common thing, which I think is a real net positive, dampens volatility, broad-based exposure. Potentially in the future, there might be like tax benefits, not in the near term, but
Mm-hmm.
all of these pieces, which are super interesting. And I thought because we're talking about tokenization so much, I thought I'd end our discussion with a little more lighthearted story. So I don't know. You must remember the guy, the British guy who lost 8,000 Bitcoin in like a landfill. That when he lost
Oh yeah, that's like he had like a search party at a landfill.
remember this guy? Yeah. So
What was
his
it like?
name.
He had it in a drawer. He had his wallet in a drawer, and then he was
No, it
moving.
was on a
No,
laptop. So if I
okay.
remember the story correctly, so his name's James Howells. No
Uh-huh.
relation at all to
I was gonna say,
just to
is
clarify.
this your
Uh,
brother-in-law?
so my brother-in-law, I think he had a laptop. It was an old laptop that he'd been, I think, mining Bitcoin on or something like that from a long, like very early on, and hadn't really done anything with it. And I believe his girlfriend at the time threw it
Mhm.
away because it was like an old kind of piece of shit laptop. And then Bitcoin went on
Tale
this
as
like
old as
crazy.
time.
As old as time, right?
I wonder if he's still with her.
Doubt it. Considering he's been
Yeah.
like excavating a landfill in Wales, so he spent probably the best part of his life at this point in kind of trying to initially get access to the landfill so that he could excavate and find the laptop. Uh, he'd like gone through loads of things where he'd been raising money and trying to do this, but he kept getting blockers by the local council not willing to do this. So then he was like, do you know what? I want to buy the landfill. And they were like, no. And
Wow.
so and he was struggling then to actually even kind of raise the capital to do this. This is a lot of Bitcoin, 8,000 Bitcoin.
Oh my
So
God,
yeah,
man.
so he was asked a little bit whether he's still looking at trying to pursue this even now, kind of like I think almost 10 years on now. And he's decided to pivot to a new strategy, and he wants to tokenize his legal
What?
ownership.
How did you stay on theme?
You know, always bring it back. Always bring it back. He wants to tokenize his legal ownership of the 8,000 BTC as granted by the court, right? And what he wants to do with that is then raise funds by basically issuing a claim on that 8,000 BTC. And then he made a formal offer of between 33 and 40 million dollars to acquire and excavate the Newport, which is a tiny area in Wales, the landfill site. He sent this to the Newport kind of city council leader, the legal team, blah, blah, blah. And they have not replied or acknowledged the offer at all. So he's went through all of this work. And I mean, what are we at? 8,000 BTC. Let's call it 115,000. Yeah, it's best part of $1 billion.
Oh my
in
God.
value. So we'll see. He says he hasn't given up. But could this be the next killer use case of tokenization, Austin?
Well,
we will find out.
Yeah, I mean, this story just continues to fascinate. There's also that really great YouTube video of the guy that buys a pizza with like 100 Bitcoin or something like that.
Yeah.
Yeah, most expensive pizza ever. But you know what's so amazing about this, and I think that we might have sort of speculated on this the last time that we spoke about it, is that if he does end up finding that hard drive, he might actually have his ex-girlfriend to thank for all of this, because if he had the hard drive the whole time, I'd be willing to bet those 8,000 Bitcoin would have been sold at a much lesser value. So, you know, this could be, maybe she was just tucking it away for him for a later date. We'll have to see.
Or maybe it never went. Maybe it never went to a landfill. Who knows?
I know. Yeah. How does he even know?
That would be like the ultimate villain story. And I would be so here for it. Can you imagine how insufferable that guy would be to all of his friends and family, if he still has friends, if he actually gets the 8,000 Bitcoin? It's like, it would be unbearable. Like, you'd never hear the end of it. But I would love one day for him to find this. It would be phenomenal if that actually happened.
Be an amazing end to the story. At the same time, you know, I mean, this is such a 2025 thing, like tokenizing, you know, a lost hard drive, turning it into a tokenized legal asset, and then letting people invest in it, basically. But well, I mean, this is a bit of,
it was like the FTX claims. We talked about this near the middle of last year, and so many people were tokenizing their FTX claims and selling them as a claim on the debt, which is genuinely an amazing use case for tokenization. That just is not an easy thing to do outside of this. So yeah, super cool.
Yeah, I mean, you're turning a sob story into a speculative vehicle here, which, you know, there's no real guarantee here. I mean, I guess that it's possible that this is a last-ditch effort to cash in on a viral story that's kind of run its course. We've been at this for about a decade now.
Yeah, potentially.
But
potentially.
If there is any legal credibility to this, I think people are going to buy into it.
Oh yes, that's for sure. People love to gamble, so I'm sure they will. But anyway, Austin, it's been a pleasure as always. We'll catch up again next week.
Talk to you then, Matt.